So good afternoon, everyone. I hope you're enjoying the conference so far and are making some valuable connections and reconnecting with old friends, commenting with some folks I know. I haven't seen in 4 years pre-pandemic, so it's great to see everybody again. So it's my pleasure to introduce our session titled Business Owners of Color in Wisconsin, Representation, Profitability, and Growth. This discussion will be spearheaded by Matt Kiris to my right here, a distinguished training economic development specialist with the Community Development Institute at the University of Wisconsin-Madison Division of Extensions. With over 2 decades of dedicated service and scholarships at the University of Wisconsin, Matt brings an unparalleled depth of expertise in regional economic development competitiveness, labor force research, and industry sector analysis. He has authored numerous studies on Wisconsin's economy and makes frequent presentations to local, regional, and national audiences. Matt has his bachelor's and master's degree from UW-Madison. And first, I could say Matt has been a huge asset to MadREP over the past several years.
When we're in need of some data research and some help from UW, we first turned to Matt, and he's never turned us down. We're also privileged to have with us trailblazers who have been instrumental in navigating and reshaping the business climate for communities of color in the Madison region. Camille Carter is the president of the Madison Black Chamber of Commerce, which supports the growth and development of Black-owned businesses in the Madison area. She has served in this role since 2016 and has been instrumental in promoting economic development and entrepreneurship within the Black community. Prior to her role at the Madison Black Chamber of Commerce, Carter had a successful career in the corporate world, and she's also a business owner herself, running an insurance and business services agency. In addition to her tireless work with the Black Chamber, Camille also volunteers extensively in the community and was recognized for this work as a recipient of the Charles Hamilton Houston Award for Outstanding Community Service and Economic Development. She's a graduate of Michigan State University and holds a degree in business and managerial economics. And next we have Dr. Maisie Hare. She is the CEO of the Hmong Chamber of Commerce, a Wisconsin Development Financial Institution, CDFI, that provides business and financial resources to underinvested small businesses across Wisconsin. As the daughter of a Hmong entrepreneur herself, Dr. Hare has seen firsthand the struggles that many entrepreneurs and business owners of color face and uses that experience to advocate for the clients she works with every day. She's a board member for the Wisconsin Institute for Public Policy and Services, as well as Employ Milwaukee, and serves as co-chair of the Toward One Wisconsin Conference, another great DEI conference, by the way. In 2020, Dr. Hare was recognized as BizTimes Media's notable minority executive and one of Madison 365's 48 most influential Asian Americans in the state of Wisconsin. She was also recognized as CEO of the Year by the WDC during its Marketplace Governors Award luncheon in December of 2022 and named to the Titan Top 100 CEOs in Wisconsin for 2023. Dr. Hare earned her doctorate at Indiana University. So together our panelists, yes, please. Well-deserved praise. Together our panelists represent a formidable force for change, leveraging their expertise and positions to champion the causes of minority business owners and to pave the way toward a more equitable and prosperous future. So this session promises to be more than just a conversation. It will be a deep dive into the trends among Wisconsin business owners of color and an exploration of tangible opportunities to enhance entrepreneurship and business ownership within our diverse communities. So please join me in giving a warm welcome to our moderator, Matt Kiris, and our panelists, Camille Carter and Dr. Maisie Hare.
Good afternoon, everyone. Thank you so much for being here. Thank you to the Urban League, and thank you to MadREP for the opportunity to be with you this afternoon. I know the after lunch session can always be a little iffy in terms of people's attention, but we're going to do our best to get you motivated and get you thinking about opportunities to better serve our business owners of color in the Madison region and the state of Wisconsin. Entrepreneurship and business ownership is a topic that I find really fascinating and one I find really important. Entrepreneurs are the lifeblood of our community in many instances. They create economic opportunities. They contribute to our quality of life. They create connections for individuals and create places for people to interact. Unfortunately, the state of Wisconsin has not always fared very well in many measures of entrepreneurship, particularly among business owners of color. That said, we are on an upward trajectory, and I think there are a lot of good things going on in the state to help support business formation and business growth. And we are on a positive path with many assets that are put in place, and I have a lot of positive thoughts about the future of this growth opportunity in the state of Wisconsin. So certainly entrepreneurship is one type of community economic development strategy. We can think about things like business attraction, business retention, but business entrepreneurship and startups is a big source of growth for many communities in a lot of ways, and we'll talk about that a bit more in here in a second. Now, when we think about entrepreneurs, I think this kind of preconception exists out there when we think of entrepreneurs that we're thinking about the Jeff Bezos of the world, the Elon Musks of the world. Entrepreneurs come in all sorts of shapes and sizes. We have people that are maybe thinking about starting a business. That might be pre-venture. We have those that are starting a business because they don't really have any other economic opportunity. They're doing it out of survival. It might be a lifestyle interest. It might be that they really do want to create a high growth type of business, which is important as well. So when we think about all these different types of classifications, they do have different nuances, but today we're just thinking about entrepreneurs as a word for business ownership in general, okay? So we think about benefits as well. Obviously, entrepreneurs create opportunities for income growth. They create opportunities for poverty reduction. Regional stability. In a lot of places where you have dominance of one or two industries, we have a lot of dependence on those industries, so if something goes south, we don't have a lot of economic stability in those communities. Entrepreneurs of all diverse types create additional regional stability because they create diverse economic opportunities. Innovation. A lot of entrepreneurs are new ideas. And we've also seen that R&D has really gone down in the United States over the last 3 decades, so entrepreneurs are increasingly a source of creativity and innovation in our communities. Sense of community. Obviously, entrepreneurs are people we know, people we interact with, people that we look out for in our community, and they create interactions for us. And certainly job creation. So let's just focus a little bit on job creation to start. And when we think about new businesses and we think about job creation, a lot of time we think about small businesses being a source of growth. But it's really new businesses that create growth in our communities. So what we're looking at here is net employment change by year based on the age of different firms. And by firms we mean actual companies, not a company that may have multiple establishments. So we're just thinking about that firm and where it's located. We'll see that light blue line and kind of that light yellow line. I don't know if you can see that very well. We see for the most part that those companies that are 1 to 5 years old or 6 to 10 years old, on a net basis, don't create a lot of new jobs. They just kind of bounce around there. We also see companies that are more than 10 years old create jobs in some times, but also lose a lot of jobs in other times. And in particular, we see times of recessionary periods and economic downturns, we see that older firms tend to shed a lot of jobs on average. Now look at the orange line on top. Those are firms that are less than a year old, so companies that were just born within that year. They create new jobs every single time. So they are the primary source of growth for job creation in many communities. Now that chart was a little bit noisy. Let's kind of break it down a little bit more. So here we're looking at average net job creation by age of firm in the Madison metro area, and we're breaking it down by decade. Those blue bars are firms that are less than 1 year old. And you can see that consistently on a net basis, new firms create jobs in our communities. And again, if we look at those kind of middle-aged firms, 1 to 5, 6 to 10 years old, some years they create some jobs, some years they lose a little bit of jobs, but for the most part, they're just kind of hovering around the middle. And again, those older firms, in some years, they do create jobs on a net basis, but again, we see that during the recessionary period between 2007 and 2009, and with the onset of the pandemic, they shed a lot of jobs. So without new firm formation, without startups, we would not be creating a lot of jobs in our communities. They are the seedbed for job creation. Now, the reality is that when a lot of these firms are formed, they don't create a lot of jobs. They're very small employers. So a lot of times that's when we think about small businesses driving employment growth, because new firms tend to not have a lot of employees. And if we look at it in terms of different industry sectors, we see that, for instance, new construction firms that have employees, and that's an important distinction, create about 2.8 jobs when they're created. up to manufacturing and warehouse that create 17 jobs or more on an establishment birth basis. And that makes sense because those types of industries tend to require more employees. But again, for the most part, it's not the small businesses, it's the new businesses that are driving employment growth. That said, if we look at birth rates, new establishments being born on a yearly basis, we see a somewhat, I don't want to say troubling trend, but one that kind of gets me a little bit concerned. These are establishment birth rates from 1978 to 2021, looking at the United States compared to the state of Wisconsin, compared to the Madison metropolitan statistical area. And we'll see for the most part that birth rates among establishments in the state of Wisconsin have trailed those of the national average across the entire time period. We can also see that for the most part in a general trend perspective, we are on a downward trend. We are creating fewer new establishments in terms of birth rates now than we were in the 1970s. So we do see, more recently, however, we see this bit of an uptick with the onset of the pandemic. Now we do see upticks in other parts of these trends as well, or other parts of this chart as well. So the question is this something that's continuing, or is this something that's just a temporary blip? And we'll come back to this here in a second. Now I think it's important to kind of put the Madison region into a national perspective or a national picture. So here we're looking at establishment birth rates by county, the 2010 to 2019 annual average. The darker the red, the higher the birth rates, the lighter the red, the lower the birth rates. And what you'll see is that the Madison region is kind of in the middle. We see some counties that are a little bit below average, we see some counties that are close to average, but we don't see that we are this kind of cluster of high growth, high birth rate counties that we do see in many other parts of the country. Now, in some parts of the country, that's kind of correlated with a lot of population growth in those areas. So we do see high birth rates in a lot of large metropolitan areas in the Sun Belt. We do see high birth rates on the Eastern Seaboard. But we also do not see that we are necessarily this big engine of growth in terms of startups. Now, what we can do is kind of get rid of some of the noise in that chart, and we can look at what are called statistical significant clusters of birth rates. And here we're doing on a county by county basis. Those areas of red are high statistically significant counties that are surrounded by other high statistically significant counties. So those are hot spots in terms of where we're seeing job births. The blue areas are where we have low birth rates surrounded by other low birth rates on a statistically significant basis. And you can see the patterns here, kind of what we talked about before. Sun Belt, high hotspots. Eastern Seaboard, hotspot around New York. We see bits of the West Coast. We see parts of the Rocky Mountain Front Range. We see Dane County being a high area surrounded by lower areas, but for the most part, we are somewhat of a cold spot in terms of birth rates compared to many other parts of the country. Now, this is prior to the start of the pandemic. If we go to the first year of data we have after the pandemic, we see the data get a little bit noisier. We do see that many areas that had lower birth rates actually increased over this period. We do see that uptick in a lot of places. But again, if we kind of sort out the noise by looking at where hotspots are, we can see that the hotspots became fewer. We also see that we are still part of a cold spot compared to many other parts of the country. So what can we do to encourage more startups, encourage more establishment births? Because again, that is the seedbed for a lot of economic activity in our communities. Now that said, we were looking at establishments that had employees. So a lot of establishments do not have employees. They're sole proprietors or they are non-employers. And when we look at this in terms of all the firms that are located in the United States, state of Wisconsin, and the Madison metro area, the vast majority of firms do not have employees. They become an establishment when they grow from 0 employees to 1 or more employees. That's the birth. But for the most part, our seedbed is really dominated by individuals that are sole proprietors. So the question is, how do we help those firms maybe grow to having employees? Or if they do want to remain sole proprietors, how do we help them become as successful as they can as a individual operator? Now, I think one of the things that's really interesting, at least from my perspective as a researcher, is that after the onset of the pandemic, we saw business formation applications and other measures of business formation spike. And what you see here is that chart on the right, that looks at monthly quits in the state of Wisconsin, people that quit their job voluntarily for one reason or another. And what you'll see is that quits really dropped when the pandemic hit. Not a surprise at all that people were kind of trying to figure out what was going on, so they wanted to stay employed. But once they kind of figured out what was going on, and we also saw injections of federal dollars into a lot of people's bank accounts, we see that the quits increased dramatically. Now, correspondingly to that, we also saw that people applying for business applications or Form 990 increased dramatically as well. And a lot of people thought, oh, that's going to be temporary. People are just trying to create businesses to get PPP dollars and other things. But they've remained elevated compared to historical trends for both all applications and what are called high propensity applications, or individuals that intend to create a business that will employ individuals. So this is not something that just kind of fell off the charts. It's continued since the onset of the pandemic. We can also see this through another measure called non-farm proprietors, or again, people that own a business of some sort. And what we see that over time, the Madison metro area actually grew faster than the state of Wisconsin and the United States in terms of the number of non-farm proprietors per capita. Now, when the recession hit in 2007, we kind of see that it leveled off a little bit in the United States, but the United States picked back up after the recovery from that period. The state of Wisconsin and the Madison metro area did not. It remained very level over this period. So we did not see that activity here that we saw in other places. But again, since the onset of the pandemic, that has increased. So again, what are the opportunities for us in terms of community economic development to identify these individuals and help them grow if they do want to grow? Okay. So that's kind of the big picture. Now let's shift our focus a little bit and think about business owners of color in Wisconsin. And my colleagues and I do a lot of research in terms of entrepreneurship. And one of the kind of key cogs in a lot of this research is my colleague Tessa Conroy. She couldn't be here today. She's at home with twins that she just had a couple months ago. So she's dealing with it. But she wishes she could be here, so I do want to give her a lot of credit for this. But these are two reports that we recently put out that looked at business owners of color in Wisconsin in terms of how they kind of compare to other places in the United States, and then also looking at opportunities to better support those individuals. And we dug into this because anecdotally we heard, as part of our work throughout the state of Wisconsin, that these individuals are disproportionately facing a lot of challenges, and that's probably not a big surprise to a lot of people in this room. So how can we better understand these individuals and help better support them going forward to create economic opportunities for themselves and for their communities? And on the bottom, you probably can't see that, but there's a link for accessing both these documents. Now, the data source that drives a lot of this, a lot of these statistics is the U.S. Census Bureau's annual business survey. And what they do is do a survey on an annual basis, and they collect all sorts of information on economic and demographic characteristics of business owners. They do it by race, by gender, by ethnicity, by veteran status. There are some challenges with it in terms of the geographic coverage that it has. It only gets metro areas, and even in metro areas, you'll have a lot of data suppression because they don't want to disclose information for individuals. But that said, it is one of the resources we have to better document what's going on for our entrepreneurial environment. It does not include very small firms in terms of the number of receipts they have, especially under $1,000. It may not capture or may undercount a lot of individuals who may be undocumented or do not feel comfortable filling out a survey form for the government. So, I mean, we have to take that in consideration. But there are other data sources to help understand business owners throughout the United States. So we have, I'm not going to go through all of these, but I think one of the things that we're really missing is kind of the ground truthing or the boots on the ground information that we don't get looking at government data. So that's why I think our panel is so important today, because they're here dealing with individuals on a daily basis, and they help us better understand what we don't know. Okay, so let's first look at and this is a designation from the annual business survey. They look at what are called minority-owned businesses. And here we're looking at minority-owned businesses per 1,000 residents in each state. And you can see that the state of Wisconsin has one of the lowest rates of ownership for minority-owned businesses across all states in the country. I think we're 12th in terms of 12th lowest. We see other areas like Florida, the coasts, places like Texas that do have somewhat higher rates. But again, the upper Midwest, with the exception of Illinois and perhaps Missouri, are fairly low. So let's think about this in terms of other measures, and let's think about these measures in terms of business owners of color compared to white non-Hispanic business owners. And let's start by just looking at the number of firms per 1,000 residents. And you can see that ownership across the board is much higher for white non-Hispanic business owners in metro area in the state of Wisconsin, the United States, than it is for business owners of color. And it's particularly pronounced for the state of Wisconsin in general. Very low ownership rates, as we talked about just a second ago on the map. Okay, so let's think about it in terms of average employees per firm. And here we see similar types of disparities. We see that white non-Hispanic business owners have an average of 15.3 employees per firm in the Madison metro area compared to just 6.2 for business owners of color. We see similar disparities with the state of Wisconsin, the United States, but particularly pronounced in the Madison metro area. Let's think about it in terms of payroll then. Let's think about average payroll or earnings per worker in these firms. Again, we see similar differences that we saw in the other two charts. We see that in the Madison metro area, the average worker makes about $40,000 for business owners of color, but almost $54,000 for white non-Hispanic business owners. So let's think about this in terms of what this might mean for economic growth and economic opportunity. And let's think about it in terms of parity. What if, on average, business owners of color had the same number of employees, had the same ownership rates, and had the same average payroll as white non-Hispanic business owners? Okay, so if we just looked at ownership rates and we reached parity, the Madison metro area would add over 1,400 firms for business owners of color. Wisconsin would add over 14,000. If we reach parity on average employees per firm, the Madison metro area would add almost 10,000 employees. The state of Wisconsin would add about 23,000. If we look at average payroll per employee, the metro area would add almost $94 million in payroll, while the state of Wisconsin would add $585 million in payroll throughout the state. Those are not insignificant numbers. If we look at it in terms of industry sectors, I'm getting a little ahead of myself. We can look at where business ownership is across different industry sectors, and this is for the state of Wisconsin. And we can see that for the most part, higher ownership rates are among business owners of color in industries like healthcare and social assistance, retail trade, accommodation and food services, and we have lower rates in industries like professional technical services, construction, manufacturing, wholesale trade, and finance and insurance. Now, part of this is driven by what people know. So when you start a business, you're going to gravitate towards your skill sets and what you know and maybe an industry you've worked in before. And if we look at employees of color by industry in the Madison region, and we're comparing this to the state average, we can see that higher than average shares of individuals are working in a lot of those industries that have a higher average ownership rate. So accommodation food services, healthcare. A couple where we do see disparities, though, are manufacturing. We have a very high share of individuals working in manufacturing, very low ownership rate in manufacturing. We also see somewhat similar disparities in things like construction. Now let's look at those non-employer businesses. So we looked at employer businesses. These are the number of minority-owned non-employer businesses per 1,000 residents. State of Wisconsin is the second lowest in the country, second lowest to South Dakota. So again, we look at the share of individuals that are non-employers compared to the share of individuals that own employer businesses. When we think about these numbers, that puts kind of an important perspective on where we're at as a state. And again, if we look at non-employer firms as a share of all firms for business owners of color versus white non-Hispanic business owners, we can see that business owners of color are much more likely to be non-employers than employers compared to white non-Hispanic business owners. So again, we see some disparities there, and we see some opportunities as well. And we look at a similar distribution in terms of where they're located by industry sector. Not quite the same as we saw before. We see higher rates of ownership for white non-Hispanic business owners for real estate and leasing, construction, retail trade, professional, technical, and scientific services, and higher shares among business owners of color for administrative support, healthcare, other services, and transportation warehousing. So going forward, what does that mean? So that's kind of the 10,000-foot view, and there's a lot more data in those reports that if you're really interested, I would suggest going into and taking a look at and reading. But we can also think about what creates vibrant entrepreneurial communities. And we know that communities that do well in terms of creating an environment for entrepreneurship do some things very well. They create opportunities to learn, question, and think differently about entrepreneurship. So we're thinking about things like workforce development. Maybe we're not just funneling people into a certain career, we're funneling them into an opportunity to create their own business. They welcome fresh voices and embrace diversity, so we're not just thinking about the status quo all the time. They mobilize resources for entrepreneurs, and I think we have mobilized a lot of resources for entrepreneurs in the city of Madison and in Dane County, in the Madison metro area over the last several years, and that's really exciting. They cultivate networks for entrepreneurs to thrive. So things like the summit that we're in today, opportunities for people to interact with one another. So it's not always what you know, it's who you know. So again, creating these opportunities for people to build bridges and build networks. Building a shared vision about entrepreneurship, and then creating entrepreneurial leaders and advocates. So who's out there kind of ringing the bell in terms of we need to do more to help our entrepreneurs because they are the lifeblood and seed for many of our communities. And one way we can do that is think about what are the assets and opportunities we have to better support entrepreneurs in our communities. And we can think about that in 7 different forms of capital, what we call the community capitals framework. We have financial capital, political capital, social capital, cultural capital, natural capital, built, and human. I'm not going to go into all these right now in detail, but I do want to give you a couple examples of how we can think about to better mobilize these different sources of capital in our community. Let's think about financial capital first of all. And we know that this is an issue for a lot of entrepreneurs, particularly entrepreneurs of color. This is some research from the Federal Reserve Bank's 2022 report on firms owned by people of color. This is a report that the Federal Reserve does every so often. And what they did was ask people for whether or not they got the financing they asked for. That was non-emergency financing, so not PPP and other things like that. And they looked at it in terms of credit risk. So here we're looking at the chart on your left, financing received by firms that had low credit risk. So if we look at firms that received all the financing they asked for, regardless of the fact that they were low credit risk, they were much less likely to get the financing they asked for than white-owned firms. They were also less likely to get some of the financing they asked for. If we look at those that have maybe a medium or high credit risk firm, we don't see quite as big disparities, but we also see some disparities there as well. So again, we do see, regardless of credit risk, business owners of color are much less likely to receive the capital they asked for. We can also think about this in terms of home ownership rates. So a lot of entrepreneurs tap into their home equity in order to support their businesses. So we look at home ownership rates by race and ethnicity for the Madison region. And Mackenzie touched on this a little bit this morning, but this just kind of coalesces it into one chart. We can see that across the board, individuals of color are much less likely to be homeowners in the Madison region than they are for white, alone, non-Hispanic individuals. So again, that source of capital just simply is not there for a lot of individuals. So we think about financial capital, we think about financial resources, we can think about other ways to help support businesses, and there's a lot of this already going on here in the state of Wisconsin. But we could think about community-based financing initiatives. Automation, so when a lot of individuals applied for financing under the PPP program, they were denied by individuals that were manually reviewing those applications. When they automated it, a lot of that went away. So there are other ways to kind of remove some of the biases that people may have as they're reviewing applications. Black-owned banks, new lending standards, so maybe different institutions underwriting individuals in different ways. A lot of CDFIs are doing that now. Public and private sector partnerships. Venture capital. There are very few venture capital sources out there that are owned by individuals of color, and that creates a disadvantage for a lot of individuals that are pursuing venture capital funds. We don't think about cultural capital, human capital, and social capital. Cultural capital is kind of the norms. How do we interact with one another? What's okay to do and not to do in our society? Human capital is often thought of the skills and abilities of people, but it's also about leadership. It's also about being proactive and thinking about how do we shape the direction we want to go. And social capital is about connections. It's about weak ties and strong ties. It's about building relationships among individuals that know each other very well, but it's also about building networks and relationships across organizations and individuals that do not know everyone very well. So let's think about this in terms of the state of Wisconsin. If we look at ownership rates for business owners of color and all business owners for employer firms and non-employer firms, Wisconsin has a low ownership among all types of individuals and a low ownership rate for individuals of color. So that kind of says something to me about maybe our culture in our state of Wisconsin. Do we indeed support entrepreneurship across the board in many ways? And one of the things that's always I found really interesting about the state of Wisconsin is that if you look at the share of individuals who were born here and live here, we have one of the highest share of residents living in the state of Wisconsin among all states that were born here. So what does that think about openness, new ideas? Are we really thinking about new ways of thinking if people come into our communities that were not raised here, that are not from here? Maybe that's a little bit different in Dane County because we do have a lot of inflow in and out, but think about maybe rural areas. So how do we increase human capital? How do we build social capital? How do we maybe change our cultural capital? So certainly think about more startups. How do we maybe change the mindset that an opportunity for you is to start a business than just going out and getting a job? Building awareness and celebrating entrepreneurs of all types. So again, not just thinking about those high growth entrepreneur opportunities. How do we think about the individual that maybe just starting a small business down the street that wants to serve their community? How do we celebrate them as well? And then building these services networks across the rural-urban continuum. So continuing to create these types of networks like we're doing here today. Mentoring, technical services, skill development. These are all things that are important to entrepreneurs. A lot of resources are out there, but a lot of people simply do not know about those resources because they do not have the networks to connect them with one another. Built capital, so infrastructure, broadband, commercial districts, roads, so on and so forth. And political capital, the connections to power brokers and elected officials that we may have to better build advocacy for our entrepreneurs. And to better build kind of those opportunities for entrepreneurs, we can certainly grow procurement and supplier diversity, both in the public sector and the private sector. We can enhance anchor institution leadership. So how do we better get educational institutions, financial firms, foundations, nonprofits, all in the same direction to support business owners, especially business owners of color. Broadband access, and not just access or affordability, but also increasing digital skills. If we have access and it's affordable, but we don't know how to use it, it's really useless to us. So how do we better improve entrepreneurs' knowledge and awareness of ways that they can use broadband to support their business? And then certainly supporting physical locations that encourage and sustain entrepreneurs. Physical spaces, incubators, quality, affordable commercial and industrial locations. We heard about some of the good things that are going on here this morning in terms of grant programs and what we're seeing in South Madison. So these are all things we can do to help get us moving forward and create these opportunities for individuals in the Madison region and the state of Wisconsin. Now, that's just kind of the 10,000 foot view, the big picture perspective. What I want to do now is kind of shift to our panel because they are the ones that really are the ones that are bringing knowledge to what's going on in our communities and provide the insights in terms of what we can do to better create opportunities for entrepreneurs. So with that, I do want to thank Camille and Macy both for being here. They're very much appreciated. They are a great source of knowledge. I just want to start the conversation today by maybe having them describe a little bit more about what their organization does and what it might look like in a typical day of operations, if there is indeed a typical day, because if your job is like mine, there's no such thing. So, Camille, would you like to start?
Good afternoon. I'm mind boggled here. If your day is like your data, then you certainly don't have a typical day either. So there you go. Thank you so much for that very informative information. I'm Camille Carter, the president and CEO of the Madison Black Chamber of Commerce. And our organization services over 800 Black-owned businesses and entrepreneurs within the South Central region of Wisconsin. We are a membership-based organization. They are not all members, but we do service all of our businesses, really helping them to start, grow, and thrive in this very challenging economic environment. For me, and maybe my colleague as well, there is no typical day. Every day is different. I would love for it to be a typical day, but sometimes you just never know what to expect. I thought I was going to be here learning at this wonderful conference, and I've gotten 20 emails, and 10 of them is from a business owner who is having some very challenging business challenges and is needing some urgent care. So I'll be leaving here and kind of helping him and not going home and enjoying my dinner and digesting this information. So it is literally, you just never know what's going to just fall into your lap. But it's a very challenging career, particularly after the pandemic, because certainly businesses of color are on the rise, and so with that, just brings a great deal of challenges for our organizations. So I'll let you talk a little bit about you.
Absolutely. Yes, that was a lot of wonderful information, and it's incredible data. That I'm going to bring back also, to my own staff, because a lot of times we're the boots on the ground, we're working with these businesses, and we have a sense of what's happening, but most certainly I think is true probably for all of us is to have this data to back up really what we're seeing. And so I didn't see anything that was surprising, but very important information, especially for organizations like us, to say, yes, that is what we're seeing, right? Just really validating what we're experiencing, or should I say, what our businesses are experiencing. So, Dr. Macy Herr, I am CEO of the Hmong, Wisconsin Chamber of Commerce, as you heard earlier. We're headquartered out of Milwaukee, but located right on the northwest tip of Milwaukee, but we have several offices, satellite offices across the state. We have one in Wausau, one in Eau Claire, one out of Green Bay, one out of Appleton, and as I mentioned, our main office is out of Milwaukee, and we hope to have one here in Madison. We really are looking for someone here. Actually, we have a job posting right now, so if you know of anybody, and as I mentioned, quite frankly, we are looking for those who have already relationships, ideally, in the community that they could just pick up and run because they know the community's best. They have those developed relationships, and so that's a little bit on the side, but that is what we are looking to do right now. We are a community development financial institution, a CDFI, we're mission-driven to help those who have been, historically underinvested, building businesses. We focus only on small businesses, for-profit businesses, but we don't just help the Hmong community, although that's part of our history and why we started. And there is the Hmong in our title, but in our name, but we are really serving those outside of just the Asian community also. And just to make that point too, I often share, the numbers might be a little different right now, but the last that I looked, several months ago anyway, we have a loan portfolio that is about 70-30, 70% Asian, 30% non-Asian in our portfolio at this time. So with that, we provide lending dollars. We take, I would call, a holistic approach to looking at someone's loan application. We partner with traditional banks, so we certainly don't see them as our competitors. We see us working hand in hand. Really to help businesses, or should I say, help banks and help the business owners by, filling that gap, right? Those who might go to a traditional bank and not be able to receive funding, they might come to us, for example, for that potential second alternative opportunity to receive financing. And then we also provide technical assistance and networking opportunities.
Great, thank you so much. Great information. One of the questions I have for you is that, we saw kind of those statistics in terms of startups being a big source of job formation. We saw kind of these trends downward over time, and we've seen these upticks more recently in terms of people being interested in forming a new business. Are you seeing the same thing in your organizations? Are you seeing a lot of new interest in starting a business? And are there other actions that we can take to encourage more startups, given the fact that we kind of trail the national average in a lot of different ways in creating new businesses in our communities?
I know our organization is certainly seeing an uptick, particularly, again, since the pandemic, of new startups. And that really does require just a unique skill set of services, because they need everything. They need mentorship. They need mental guidance. They need financial support. They need help to ideate and clarify and focus their visions. And so that really does require just full capacity from our organizations. Our organization is not a CDFI, and so a lot of times our work is really building partnerships and closing the gaps on the resources that are out there within the community to help them fund their dreams and to help them close that gap. And so we rely on CDFIs and lending partners and other economic development partners to really help to navigate these entrepreneurs through this landscape, because that really is what is necessary for them to be successful.
I'll add to that in that everything she said, but I'll also say a lot of times our business owners don't have the relationships, to the resources that they need. And on the other end, the resources that we do have, whether that's the financial institutions or, the traditional financial institutions or other sources of support, may not know who these individuals are. They want to help, but they don't know who they are. So we are sometimes, or oftentimes, that bridge that brings them together and says, we've worked with this individual, this person's a business owner, they've done these things, X, Y, and Z, and they could really use some help on this. And we've already been working with them. This is who they are. This is their character, right, for example. So we can, give that warm handoff and that relationship to our partners, whether that's at the financial institution or somewhere else. And so then there's that relationship already, because, we have done the legwork of building those partnerships, that trust, with these organizations and these individuals. So now we can bring them together to work together.
Great, and that kind of leads me into one of my next questions is looking at these relationships and the importance of networks and mentors in helping new entrepreneurs and new businesses kind of get going and get off the ground. So obviously you just spoke that a little bit, but do you see, greater importance of networks with your clients and mentors? Are there more opportunities that we can do to connect entrepreneurs with resources and get them the mentorships that they need? Because I know a lot of business owners are busy running their business and they don't have a lot of time to be a mentor. Are there ways that we can incentivize that a little bit more?
Absolutely. There's all types of ways to incentivize it. Really just having the capacity to go to the businesses themselves. A lot of times it's very difficult to get entrepreneurs out of their business. And so we are strategically making efforts to go to our businesses and to take the resources to them. With that said, it's important to note that capacity, particularly for our organizations, is key. Oftentimes, our organizations are underfunded and sometimes often undercapitalized or under employed, where we have staff. And in order to close these gaps and to build these relationships. And so as we think about what is actually needed for long-term sustainability, it's really to continue supporting the boots on the ground organizations like ours that are that have the intelligence, the cultural competencies, and the relationships that we can really just take to our businesses and meet them where they are, because that is what, right now everyone's busy, and I think that a lot of what we're all experiencing is just some post-pandemic trauma and just an acceleration of how we're working and how information is coming out. And so people are extremely busy, and entrepreneurs are even busier than the most general people.
Mark, I don't think I answered your question really well that first time. So anyway, I'm going to attempt to answer that first question and this one together. And that is that strategies, how do we help businesses or individuals who want to start a business, to encourage them to do it, and that is through mentorship. That is through letting them see that other businesses are doing it too. One of the strategies that we're using at HWCC is making sure that we have a marketing team that could put the information out there about what resources, not only resources that we have available, but letting them see that other businesses are doing it too. Other individuals that look like them, have experiences like them, are getting the resources that they need and that they're making it too. It's amazing, at least with the clients that we work with, those that we tend to attract. As soon as they start seeing someone who is like them, they can identify with them, that they're making it too, they're meeting with us, or just simply seeing someone that looks like them, achieving something. You see what's in the chats, the posts in our Facebook posts, and they'll say things like that. They'll tag their friend and say, look, this person is doing the business that you wanted to do. You can do it too. And if we could see that happening, we've already been winning, right? That in itself is rewarding for us to see. So if they could see each other in that way, then get them going, I think that in itself is a strategy, right? So we love our marketing team. We love getting information out there, sharing the stories. And mentorship, yes, that's what we do at our chambers, provide that mentorship, but we can't do it all. So we rely on many of our friends, at other organizations who do similar work to also help us out.
Those are great perspectives. I do want to go back to financing a little bit, and we do know that this is a big challenge for a lot of businesses. And Dr. Herr, you spoke a little bit about some of the approaches that you're doing with the chamber. But are you seeing other models out there that might be useful to put into implementation Wisconsin communities, things that might be working in other parts of the country that you may have heard of? Or are there better ways for us to engage with more traditional lenders as a way to help them better understand the needs of entrepreneurs of color?
We take our technical assistance very seriously. We do think, if we can help keep that relationship with these business owners and help them understand and guide them through the steps, and let them know that they don't have to be afraid to come to us, if they ever have a challenge. So, for example, if someone comes to us for a loan and they're paying pretty well, they're doing well, but there comes a point where they just can't pay. We want them to know they can come to us and we will work with them. We have to have a willingness to work with them and say, so what can you do right now? If you can't pay the full principal, can you at least pay the interest? How can we do that? So I feel as though, at least as a CDFI, we have that ability to be creative and work with our clients in that way. So maybe the next 2 months, 3 months, pay interest only. Then we'll, how can we work that principle? So being willing to do that and then following up with them as I think is very important.
And for us, it's really partnering with, we've got relationships not just with local banks, but with fintech companies and other platforms that are providing very creative funding strategies, strategies that are not predatory in nature, but just creative to really help these businesses overcome some of the prejudices that really occur in typical underwriting. There are more and more companies now. I was just speaking with someone talking about venture capitalists. We're working with a loan program now that is backed by SBA funding, and it's a all-black initiative called Lendistry that really is looking at some very non-traditional underwriting, and so we're trying to close the gap and make sure that we have relationships and are talking with businesses about these resources that are available, and then certainly Kiva, crowdfunding, just really creative initiatives to help to just find small sources of capital. Sometimes, anywhere between $10,000 to $20,000 can go pretty far for someone that's just getting started, particularly with businesses of color. They're pretty creative, very strategic when it comes to financing and really making those dollars stretch.
Oh, and Matt?
Yeah.
Sorry. I'll add this too. I want to just share that I think it also goes further back to just making sure that we have diverse lenders, individuals in our businesses and our financial institutions, whether that's working with, in our organizations, who understand that there has to be flexible, I don't know if flexible is the word, I guess being able to adapt to different individuals and their cultures. So for example, on our revolving loan fund committee, we sometimes have instances where we have individuals, clients who work with people overseas, and they import their products, export, and the individuals on our loan review board don't always understand those cultural ties, and so that's where we come in. If someone with some of that background, whether it's working with someone in our organization, but just having someone who understands those cultural differences and ways in which we do business, I think could be very important. Because easily, I think this client that I'm thinking about could have been denied. But because some of us were there to say, well, this is the situation, they were able to receive the funding.
Advocacy is a very large part of what we do. And we advocate on all ends, certainly at state, local levels, but we also advocate with our partners to really help to bridge and dismantle those prejudices or those barriers of cultural existence. And so we've got to really advocate and knowing our businesses and knowing our partners and really just finding those win-win scenarios to help with better understanding.
That's fantastic. We'll have one last question for the panel, and then we'll open it up to all of you for any questions you may have. But is there maybe one thing we didn't touch on today that you think is a really important takeaway for audience members today, or something that we did touch on that you would say is the key thing that people should take away and think about later today?
Well, we touched on a lot of data, that's for sure. I just underscored just the importance of continuing to support these small agencies like ours. Just when you look at, everyone that operates a chamber of commerce or a small nonprofit that's working in economic development and business development, these individuals are not in it for the money. They are in it for the mission. They're in it for the business. They really love Wisconsin, the ones that I know, and love living here, and really want this to be at whole the best place to live across the United States. And so really, when we're talking about a sustainable shift in supporting entrepreneurs and entrepreneurs of color, we really have to look at the ecosystem, look at where the true work starts, and that foundation, and that's with organizations like ours.
Mm-hmm. Yes, and I will also add that I think one of the most important parts of all of this is understanding, that we all gain as a state. We all gain when our, businesses are diverse. It just helps our economy as a whole, right? And provides for human capital, for cultural capital that we bring to the state, and of course, financial capital. So it helps us as a whole, right here, whether that's in Madison, as a whole state. I truly believe that helps all of us.
I found your slide the most profound slide to be the benefits of what parity would look like if, these barriers were non-existent, right? And everything was created equal. How gorgeous of a state we would be. I think about families, we think about legacy. That messaging really needs to be resounding, and I don't think that the average Wisconsinite really understands that. They don't understand that information, and if we really could wrap arms around getting that out and communicating that on an intentional level, what a great place we could be. We certainly wouldn't be last. I think 50th, you know. You said it's second to last. I just think that it's last. It's a terrible statistic and unimaginable when I wrap my head around that. And I think about, as an entrepreneur, what a great experience I had as an entrepreneur here. However, much like our school system, much like our general entrepreneurs that are just kind of getting started, particularly, certain industries that our businesses are starting within, that just is not acceptable. That's not acceptable. Wisconsin can do better, and we deserve better.
I want to thank you both very much for your perspectives and insights, and welcome to questions, but let's first give our panelists a round of applause. Yes, sir.
I have a multi-part question.
Okay. My question is this. It's not to any particular individual. What are the most successful new business categories and types that can also create growth? Given the economies of scale, cost reduction efforts, and buying power inherent with large established businesses who have this competitive advantage, how can new and small businesses compete? Is the hope and goal to build a small business to be eventually bought and sold to a large corporation who does not want or care to do research and development and innovate? Or can we eventually compete and have sustainable businesses?
Ooh, that's lovely.
That's a great question.
Wow. I think that for businesses, the goal, when I look at very successful businesses, and I think in the slide some of this information was depicted, particularly in construction and those types of businesses, when I think about that and businesses tied to infrastructure and areas of high growth here in Wisconsin, we have to understand that many of these businesses are 3 and 4 generations deep and have a very long track record. So when new businesses come in and they really want to be like ABC Supply Company, they have to understand that there is a long ramp-up period, and having strong financials, having a strong foundation, having strong partnerships, having a clear business plan, and having an exit strategy. Now, if that exit strategy is to pass that on to the next generation, that has to be very intentionally thought forward and in the business plan. And so a lot of business owners do not have that end in mind. They just get started and they don't think about how they will grow and what they are actually building and the reasons for their business. And so that, I think that's key.
I think there's a generational, I don't have any data to back this up. I just, based on what I'm seeing and hearing, is that there seems to be a generational shift in thinking in terms of sharing information. I see that a lot of the younger entrepreneurs now, we're at a time where people are not afraid to share information with others. Where I think I think some of the generations, maybe it's not true for everyone, but what I saw and what I experienced is that, there was a lot of fear that if I share too much information that someone's going to take from me, right? But now I find that a lot of the younger generation, the entrepreneurs, are not as afraid to share information about how they got to where they are. They're willing to share that information with each other. I see a lot of them who are starting businesses, many of them in the beauty industry, who are sharing information with others. and maybe they're making some money from that as well, but they're willing to share, and then growing other business owners as a result of it. And so I see a lot of that happening in that industry, in the health and beauty field. There are others as well, but that one is growing really fast. But what I also see sustaining those individuals, those types of businesses, is that they're also continually learning, right? So, and innovating. And so as they're teaching, they're also learning some new ways to do their business and growing as a result of that also. So, I mean, sure, there's so much more that we can even say about that, but those are the first things that came to mind, industries that are growing really, really quickly when I heard your question.
And I was going to say, just to add to those comments, you are seeing some trends in terms of which sectors are seeing high startup rates. So things like professional technical services, you don't need a lot of capital to get going to form a lot of those businesses. Right. And then you're also seeing, on the manufacturing side, an industry where you typically do need a lot of capital to get going, you're seeing small-scale, flexible storefront manufacturing go into a lot of places where you can customize orders on a small basis, be responsive to local orders. And it's an opportunity for a lot of business owners to get their foot in the door in that sector.
A lot of online businesses now too, talk about, non-employee based types of businesses. So we do see quite a few of them. In fact, I think a lot of folks that we work with right in this area, Dane County and, Madison, are online businesses. And that's what we're seeing anyway in terms of those that we typically serve.
What type of online businesses?
Consulting types of businesses. So I should specify that when I'm talking about like online businesses, they might do, for example, hair inside their homes, or they might have a chair somewhere, that they rented at a beauty salon somewhere. But for the most part, they do their, marketing and things like that right online.
For me?
Yeah, okay. Please go ahead.
More or less curious, do you run into a lot of disruption businesses with small businesses? Like, for example, I was recently involved with 3D printing of homes. And I found that those businesses had a hard time just trying to get people to even accept the fact that homes could be 3D printed and actually do other things. So I was just wondering if you've run across opportunities where more disruptive type businesses have come your way.
Not so much. We've got some businesses that are in the biotech sciences that are doing very innovative and cutting edge work. Disruptive, I think they're very successful in that, but not disruptive to the point where it's, the idea, the business conception and the idea is not received by their target audience. Not I.
Yeah, and I think for us it's a couple of things. Once in a blue moon, I'll have those individuals, and I'm trying to understand the disruptive. I think I understand what you mean by that. But we do have, some businesses that come to us that are so new, you don't see many of them yet, or controversial, right? And our funders won't fund. So then we have to say no anyway, so we can't even say yes to someone if they are coming to us with a business that is controversial, right? Because of our funders. Now, can we provide them technical assistance, general technical assistance in business, starting their business, growing their business? We can do that. In that way. But again, in terms of funding, we usually say no before we can even find out more.
When looking at the data of small businesses and the quit ratio, I'm just wondering, for entrepreneurs who take the leap and then they realize I'm an expert in the specific thing that I want to do, but I have to do everything. How do you facilitate helping resources like that? Like from the marketing or all of the list of things that make a business run, but a person is like a good cook and they sell a lot of things out of their curbside, or a good consultant, but they don't know how to do all of the other admin. Are there like companies or resources that do like the infrastructure or the operations for small businesses so that the business owner themselves can just be booked and do their thing? Or is that what the funding is for, to get staff to do all of those things? How do you work with new business owners in that position?
I think that's the challenge of most business owners, especially solopreneurs, which is probably the bulk of the businesses that we serve. They are often over capacity, right? There's certain things that can be outsourced, and that's worked on within their budget, and certain things that are essential for them to help grow. And I think this is the approach that we really look at is, what can be outsourced, because not everything can be outsourced. And, some of my entrepreneurs come to us and say, I can't get out there and acquire new business. I don't have time. I'm in the shop. I said, well, there's no one that can sell your business better than you. So, we have to work on other areas of time management and budgeting, and really looking at what could potentially be outsourced and what does that entrepreneur need to do to develop their business.
Yeah. Each business is different. Every case is slightly different, but I would say in a nutshell, that's what our technical assistance is for, is to sit down with them. So even if someone comes to us and say, their major need is they want a loan, right? We have an inquiry form out there, and we say, how can we best assist you? And a good number of those inquiries are that they want funding. But we don't start there. We will typically meet with them, have them connect with one of our regional business managers, who will then start from the beginning and say, tell us about who you are, tell us about your business. That's where we start. Right, and then from there, finding out what their needs are, and if they said, I'm the only one, then this is all I can afford. We help talk them through that, and then also connect them to individuals who might be able to help, but also provide them opportunities to do business-to-business meetings, right, meetups, like networking opportunities, and even letting them know, how do you network? You're going to be surrounded by all these different types of businesses who do X, Y, and Z. You'll want to connect with so and so and so, because these individuals are probably individuals you want to talk to. And I can't tell you the number of times with just networking and guiding them through these businesses and introducing them to some of these folks, how much they can get out of that and learning from them. Because after the networking opportunities, they'll say, oh, I learned so much from this marketing person. And they're connecting me with so-and-so. Or we have marketing people on our staff anyway, who can provide them that guidance too.
So I'm getting the sign to wrap things up to move on to our next session, but I do want to thank all of you for coming today. If you do have further questions, I'm happy to stick around. Again, I want to thank our panelists, and I do want to thank MadREP and the Urban League again for hosting this great session, and I wish you all a good afternoon. Thank you very much.
Thank you.